On this week's episode of the Crushing Debt Podcast, the secret to moving forward in reverse. So welcome back, everybody, to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law. Welcome back, your co-host, George Corbello. Welcome, George.
Hey, how are you doing? We're going to struggle here to try and do this live, apparently. No editing puts us in a little bit of a spot here.
Well, we're good for live, although, you know, Patreon could help us get better editing here. If anyone
Slide that
wants.
in. I like that.
Yeah,
Very early.
So
you're winning bingo there. It's good.
What do you got going on this week?
I gotta say, okay. So another challenge, right? I needed to talk to you about this itself. I'm saving for a home. You know, getting the house. So we're doing all that. So we're in the saving challenge. So we had the no spend, right? So now it's how can we save a little bit more? So my wife and I, we are actually in this dual challenge that we're working through. It's how much can we save $5,000 in 26 weeks? So 6 months. Basically, so every week we're putting something aside, and we're saving towards that. So that's what we're doing this week. I'm okay. You know, it's a little extra. I'm doing extra here. So again, we're trying to do as much as we can towards the down payment. But my wife and I are now, like competitors here, trying to see who can do it faster.
That's $192 a week.
Pretty much
would get you $5,000 in 6 months.
So we didn't do it. So again, I have to play the mind games with myself here. Remember, so it would be easy to just say $192 a week and we're good to go. But of course, it's no. You work up. So it's $50 the first week. 65 the next, 90 something the next. So this gradual. So I'm trying to play the mind games with me. So it's not like, oh my, where am I going to find $192 a week? It's like no. I just work my way up to each week, and again, the incremental increase allows me to feel better about how do I save. So there you go.
In today's economy, just cut back on paper towels, toilet paper, and
Either that or you hoard them. You figure out what the next run is going to be.
Put it on eBay.
And then eBay.
Figure out what the next run's going to be.
Wait, what was that voice?
Yeah, so you're hearing, if you're listening to the audio, you're hearing a third unannounced voice. So I do want to welcome back. So he was last on episode 120 back in June of 2018, which seems like, good Lord,
a long time ago.
Podcast was just in its infancy. George didn't even exist back then.
He was in grade school.
He was probably. So no, episode 120. He is back on the show. Michael Banner, welcome back. I do want to give people your bio. So you became a licensed mortgage professional in 1982, approximately 15 years ago. Your passion took you in a new direction as you became focused on assisting the senior segment of the industry as they approached or are already in retirement, and learned through very personal experience that the gift of a longer lifespan can sometimes be a double-edged sword. Yes. So he began devoting his career to helping seniors with reverse mortgages. Michael's a nationally known speaker, a published author. He's an educator. He's performed education classes for more than 20,000 financial planners, independent financial advisors, long-term care insurance agents, attorneys, and realtors on the topic of using home equity during retirement. He's appeared on hundreds of national, local, and regional television and radio broadcasts, produced articles, blogs. He has 3 children. He has 4 grandchildren. And he is hidden behind my big head if you're looking on the video. But welcome back, Michael.
Thank you very much. That's a nice introduction. Wow.
So, we talked about it in episode 120, but, we wanted to talk to you about reverse mortgages. I mean, I guess the first thing is, have there been, since we last talked, what would it be now, 5 years ago? Because my math is terrible.
Carry the one.
Whatever.
Crushing debt. Okay.
Crushing debt.
Not crushing math.
I crush it because I don't know the numbers. So I'm like, I don't know. Anyway, anything new in reverse mortgages in the last, 5 years or so?
Well, unfortunately not. Quite frankly, it's still, the most misunderstood. There's still more half-truths and misinformation about reverse mortgages out there. I'd say the one thing that is new is more and more financial planners, long-term care providers, even a couple of Nobel Prize winners in economics over the last several years have said, yes, when the reverse mortgage is used correctly, it could be one of the greatest retirement planning tools. And that's what it really is. It's a mortgage, but everybody's mortgage is necessary. You're saving for a house,
Right.
you're saving for your down payment.
Right.
You know, you have to get a mortgage. Most of America does, the great majority. A reverse mortgage, again, is for people that are equity rich, not cash poor, but getting there.
Right.
And it's really sad to a degree because with the terrible state of the economy today, with, you know, unless you're in the top 2, maybe 3% of the country, you're hurting today.
Yep.
And so suddenly that senior, 62 and above, who's on a fixed income, maybe they're working part-time somewhere, but truthfully, their greatest earning days are behind them. They don't really have a choice but to turn to their home equity as the fourth leg of that retirement, you know, stool.
Yeah.
They always talk about that famous stool, you know, Social Security, pension, savings. Home equity is the way to go. And you can go several different ways. I happen to be biased. I think the way that gives you, or that obligates you to no monthly payment for the rest of your life, I lean towards that option.
That's a good option
That's
as
an
well. I
option and
agree.
a half there.
I'll take
So
it.
I think so I wanted to talk about that a little bit, but I think the biggest misconception that I always hear is, well, wait a minute, we've got the reverse mortgage. If mom is living in the house under a reverse mortgage and then mom dies, we're going to have to pay it back. And, well, but if mom has a, quote, regular mortgage and mom's living in the house and mom dies, you're going to have to pay it back.
Yeah.
That's exactly. It's amazing what our detractors print about this product. And when I say detractors, I'm not talking, you know, Joe Blow and his 30-second thing on Facebook. I'm talking.
You mean TikTok is wrong, or is that what you're
Yes.
implying? Oh
no,
no.
the internet's always correct.
Never.
No, if you read it on the internet, it's correct. I knew that. But the truth of the matter is, I mean, we're talking, quite frankly, the Wall Street Journal, USA Today,
Right.
Consumer Digest. They're getting better, but they still. The problem with the reverse mortgage is when the kids get the house, they have to pay that mortgage back. They have to pay any mortgage
Yeah,
back,
any mortgage.
like Sean just said.
Right.
Oh, that's right. You say there's no payment, but they have to pay the taxes and insurance. You have to pay the taxes
still
and
have to do that,
insurance
right.
in this
Yeah.
country if you don't have any mortgage.
Right.
Again, it's just unbelievable what our detractors say.
I do think, to be fair, I do think the one valid con, and even not necessarily something that would prevent me from getting a reverse mortgage or prevent
too
me from
young.
recommending it. Well, we'll talk about that in a minute. But it is a negative amortizing product.
Yes.
So that's the one thing that I think people misunderstand. In other words, if you borrow $100,000 today, you don't have to pay it back. But when you do pay it back, it's going to be more than $100,000 because the interest is
Yeah, the
being
interest,
tacked
yeah.
on.
Right.
3 to 5 times more. I mean, I would never hide that from anybody. You know, in the old reverse mortgage days, that was what your Regulation Z, your truth in lending was for. And again, I always say to people, oh my God, is that how that's our con? Well, may I ask, do you have a mortgage? Yes. What's your mortgage payment? They give me a number.
Right.
Can you please multiply that by 360? Because that's 30 years, 360 months. Oh my, you're paying back 4 or 5 times more than you borrow.
Right.
I guess your 30-year mortgage is the same con. Now, ours does have a downside. And when you do national speaking like I do, you never want, I mean, you want to educate.
Yeah.
I mean, am I a salesman? Yes. Do I make a living, you know, as a reverse mortgage professional? Yes. But you have to tell people the downside. And the downside is the inheritance to your children is going to be less.
Yeah.
There's no way to get around it.
Yeah.
A lot less than if you would have got a fixed rate mortgage. Now, that being said, if you were going to have a $1,500 house payment, which is unbelievable, a little below the average in this country, and you live the last 20 years of your life, and sometimes it's 25 or 30
Yeah.
years, but let's just go 20 years.
Yeah.
You get a reverse mortgage when you're 65. You leave the planet when you're 85. 20 years of saving $1,500 a month. 1,500 times 12 is $18,000 a year. Times 20 years, that's $360,000 towards mom and dad's quality of life.
Right.
I mean, that's not just medicine and transportation and taxes. That's cruises and clothes and trips to see the grandkids. So when people say to me, especially financial planners, who really and truly, as you know, Sean, have a fiduciary responsibility to maintain wealth for their client and then pass it on to the next generation. The reverse mortgage kind of laughs at that responsibility because it says, really and truly, we're going to put mom and dad's quality of life ahead of what little, Jane and Dick are getting when they die.
Right.
And it sounds blunt, but very rarely. I was in someone's house yesterday, obviously for privacy laws, not going to say where, when, or what, where the parent was hesitating and the son and the daughter were on a speakerphone going, "We don't want your house. We're never
Right.
going to live in Florida. Please do this." And, and then of course the other thing is they are going to get money when mom and dad die. Just, I don't know why I'm doing quotations on a.
Oh,
Well, we're on that video.
Okay, good. Yeah, okay. Just not as much.
Right.
Yeah. I do quotations even when I'm on radio, though. I have the perfect body for radio. It should be said.
I have a face made for radio.
Yeah. And I have the body. We could do this.
There you go. And I remember, I don't think we're there anymore because of the way the real estate market has shifted. I do remember having to do reverse mortgage short sales.
Yes.
And it was actually kind of funny. So my experience has been that the reverse mortgage company would say, so let's assume the homeowner passes away, which is, the homeowner no longer living in the house is one of the events that triggers repaying the loan.
Correct.
So homeowner passes away, reverse mortgage company says, hey, we want our money. But once they factored everything in, the reverse mortgage is owed $250, let's say, and the property is worth, let's say, $200. So there's a $50,000 deficit. The reverse mortgage company, in my experience, pretty much all of them would say, look, let's get it appraised, pay us 95% of the value of the property as determined by an appraiser, and we'll take that regardless of the balance on the reverse mortgage.
That is pretty much correct.
I had one person argue with me because the stats were reversed. They owed, let's say, $200, and the house was worth $250. And they were like, well, why do we have to pay 95% of the $250? You don't.
You know, sell it and make $50,000.
Sell it and pay the Sell it and pay the $200. But people just didn't understand that concept of.
And also that 95% concept is staggering for the heirs. I've gotten out of the habit. If you look back on what we did 5 years ago, I probably always say children. And I've really tried to break that habit into heirs. Because when you say children, you think, Mommy, what did you put in my lunchbox?
6-year-olds.
Yeah, these children are 40s and
exactly.
And 50s. But we're getting, because of inflation, more and more people going, you know what, Mom and Dad are gone. And let's remember, they don't go at the same time.
Right.
God forbid
that's
a horrific accident.
Right.
So, one of them, the remaining spouse, does get to live there with no payments, even though they've lost a fair amount of family income when one of them dies. But now we're getting where people go, you know what? I never really wanted to live in Florida. I said that 20 years ago, but now I'm in my 50s. And I kind of like their house on Countryside Boulevard, but with $50,000 upside down. And I don't care how high your credit score is. No one's giving you a mortgage.
Right.
But any one of the heirs can buy the house for 95% of the then present value. Right. And HUD eats, they don't really eat it because they do a claim to the MIP, the mortgage insurance premium. But they're buying the house for 95% of today's value. But Mom and Dad got to live there 20 years with no payments.
Right.
I mean, it is such a win-win now, except if you're if you're a son or a daughter, I don't even know what the word is. I know what the word is, but I don't want to say it.
Don't say it that way.
Yeah, I won't say it that way. But if you're
a mean one.
Mr.
Grinch.
If you're a mean one that's going to say to Mom and Dad, I know you could use this for the quality of your life, but quite frankly, I'm more interested in my inheritance. If you're one of those children, well, your parents shouldn't get a reverse mortgage.
Right.
Or your parents should put you up for adoption.
There you-
Maybe it's not too late.
And it is it is the only loan product that I know about that is what we call non-recourse. So if I take out a mortgage and I don't pay it back and there's a deficit, the bank is going to sue me and say we want that extra money.
Mm-hmm.
But with a reverse mortgage, it's non-recourse. So if the house happens to be upside down, the bank is really only limited to getting the house back. They can't go after any money.
It is
Okay.
the only non-recourse residential loan in the history of America. No personal guarantees. When you close a reverse mortgage, a traditional refi or a purchase reverse, which I want to talk about,
Yeah.
and if you close with a title company or an attorney that has never closed a reverse mortgage, and they come to this 8.5 by 11 piece of paper, not written in legal terms, written in layman terms that says, Mr. and Mrs. Smith, the borrowers realize you are not personally guaranteeing this loan. I've seen closers, title people go, well, this can't be right. Of course they're guaranteeing the loan. No, they're not, which in effect means that you close. Let's forget being $50,000 upside down, because from 2008 to 2012, I was seeing 200, 300,000 upside down.
Right.
Wow.
And mom and dad had $1 million in life insurance or a few $100,000 in annuities. It's damn straight that Wells Fargo and Bank of America on a fixed 30-year mortgage. I'm not picking on them. They're just the two biggest in the
You're
country.
perfectly welcome to pick on them.
Okay, well,
I don't like them
Okay,
either.
I won't say Skank of America, but I'll say Bank of America. Are you going to edit that out? Or
There's no editing anymore.
Oh, that's great.
We don't edit.
all right, so I get a lawsuit tomorrow from Bank of America. But be that as it may, any what does they say? Any advertisement is a good advertisement. They do ask the question on the phone with the kids or the attorney. Did mom and dad have any other assets? Because they signed personally. And before they do that short sale this time around, last time around they were bailed out. But too big to fail, there's a lot of people in the world, and I agree with it, they may have disproven that theory. I'm not sure the government is going to give $1 trillion to the banks to bail them out this time. So they're going to say, is there any annuities, life insurance, savings? Because mom and dad guaranteed this loan. In a reverse mortgage, they go, did you get all of mom and dad's possessions out? Let me tell you where you can send the keys. They can't even ask about the other assets.
Yeah.
Interesting.
Yeah.
Okay.
So that's all the negative stuff. Let's talk about all the good stuff. So what are some of the ways that a borrower, a homeowner, can use a reverse mortgage? What can they do with the money?
That's kind of incredible, because we would be here for 24 hours minimum.
I like to keep the shows about a half hour.
Okay, we'll
give or
try and
take.
do that. It takes me a half hour to say hello. It's just incredible. Obviously, the first use is to pay off their existing mortgage, obviously, and eliminate that mortgage payment. And when you say to somebody that's on X amount of dollars a month, and let's just pick an average person, not a upper middle class. Let's say mom and dad are each getting a couple thousand a month, Social Security, and maybe there's a small pension, but pensions are far and few between now in the new world.
Yep.
Let's say they're retired on $5,000 a month. That's not so bad.
Not too bad.
Okay, that's America. And you eliminate their $1,500 mortgage payment. You don't do anything else but that. You just gave them another 35%
Right.
of disposable income. Now let's say you eliminate the $600 car payment. Oh my God, these people are living like they've never lived. And that's mom and dad. That's America today. If they don't have a mortgage payment and they do a reverse mortgage, we like to do a line of credit, which grows with time as an inflation hedge, which is kind of incredible. But then they're using it for not just high quality, of life, not just cruises and fun. Again, the great majority of this country doesn't have long-term care insurance.
Right.
And I'm not an insurance salesman. I don't have an insurance license, but one of the sad things we most certainly learned with COVID is that the seniors that lived at home and were being taken care of at home, they're still alive today.
Yeah.
The seniors that had to go into a home because they didn't have long-term care insurance and couldn't afford care at home, well, most of them died. And they died alone because people weren't allowed. I mean, if there was any deep message from that sad couple of years that this country had, is don't let mom and dad go to the home. let them stay at home.
Right.
In fact, there's an incredible,
Wow.
I don't think article, I guess you would call it paper, that your viewers can Google. And it's by the National Council on Aging. And it's actually called Use Your Home to Stay at Home. You know, have somebody come in and check your medications when you're on 12 of them a day. You know, have somebody come in once a week and check your blood pressure. You know, move the master bedroom from the second floor
Right,
to the first floor.
Yeah.
Use that reverse mortgage to stay at your home, because no one disagrees when you stay at home, you live longer.
Yeah.
No one disagrees
Yeah.
with that.
No, absolutely.
Then, of course, there's the purchase reverse mortgage.
Yeah, you can use it to buy the house.
And-
You don't. It doesn't have to be a refinance.
That's right. And 1.6 million.
Wait, so explain that, because
Yeah.
that just you're like okay, I'm gonna do all of the my hand gestures and stuff
Yeah.
like that. I'm like, wait a second, say that again.
There's like 1.6 million realtors in this country, and I think about 12 of them, though, you can use a reverse mortgage to buy a house. I shouldn't say that because I've educated thousands, but it really is incredible. The math is the same. In today's world, one of the unfortunate news about reverse mortgages, the higher the rates go, the less we lend. Okay? In the real mortgage world, rates go up,
Yeah.
your payments go up.
Yep.
In our world, since we have no payment, in order to protect the investment for the ultimate investor, our loan amounts go down.
Yeah. Okay. Makes
So
sense.
today, unfortunately, at 65 years old, we're only lending about 35% of the value of the home. And that's hurt us considerably.
Yeah, I can imagine.
18 months ago, that was 50%.
Wow.
So, but going back to that purchase, you know, I'm going to use, I know you have, you know, viewers all over the country and all over the world and possibly all over the galaxy. Who knows? Klingons could be watching this right now. Maybe Vulcans. And they live to be like 300. So reverse mortgages are
Perfect
very
for them.
big on Vulcan.
Perfect, yeah.
Very big, you know, because the older you are, the more we lend. But, you know, you have somebody, you know, thousands of people moving to Florida, which is reverse mortgage heaven. And they, you know, they walk into a great real estate agent, you know, in countryside. You know, that's where we are right now. And
Right.
they go, I just sold my house up north or out west, and I made $400,000, and I really would like to live in Countryside Boulevard or Landmark Drive, or maybe even a little further north. But I'd like a 3-bedroom, 2-bath with a screened pool, and, you know, maybe something that's been remodeled in the last 40 years.
Right.
And that real estate agent is thinking, oh my God, they have 400,000, but that costs 600,000 in this area. And at that point, when they tell the senior that, in the past they had two choices. Do you want to get a mortgage? I mean, you're putting down 400,000. The house is 600,000. I mean, it's a small mortgage payment. No. My son, the lawyer, my daughter, the financial planner, said no payments during retirement. Well, do you have an extra couple of $100,000 in the bank? Well, we do, but that's all we have to live till we die. So I guess we'll settle for the $400,000 house in a different area. No, you can get the $600,000 house. Put down $400,000. My favorite mortgage person will get you a $200,000 purchase reverse mortgage. $400,000 from you, $200,000 from the lender. There's the $600,000 that goes to the seller, and you'll have no principal and interest payments for the rest of your life as long as you live there. Now,
Wow.
they're not getting a monthly stipend. They're not stipend. Young people don't know that word. They're not getting a monthly payment
The payment,
from a
right.
reverse mortgage like a refi, because we're taking it all up front and giving it to the seller.
Right.
But they have no mortgage payment. And instead of living at a $400,000 house in a different neighborhood, that this was not what they dreamed of. They're living in their $600,000 dream retirement home.
Makes sense.
And I mean,
Wow.
I don't know if you've ever, Sean, I know you do closings too. If you've ever been to a closing of one of these mortgages, I mean, there's hugs. There's hugs and postcards. And I mean, you're giving them their dream, their retirement
Right.
home, and they have no payment.
And you said something that I want to make sure we don't skip over. So someone who, let's say they don't use it to buy the house, let's say they live there and they're using the reverse mortgage to refi the house, they could put the reverse mortgage on the property not take the entire. So if we're going to give you a $200,000 reverse mortgage, great. Give me $100,000 because I want to do X, Y, Z.
Yeah.
The other $100,000, I'll take when I need it.
In a line of credit.
I'll take $500 a month. I'll take however they want to structure that.
And it's also like any other line of credit. It's pay as you go. So I approve you for $200,000, but we only use $100,000 to pay off your mortgage to get rid of that $1,500 payment.
Right.
That other $100,000 is a phone call or a click away on your computer, and you're not being charged for it. No interest is accruing because you're not using it. But unlike your line of credit with the bank, two things. Number one, it's growing. Every 12 months, your line of credit grows, and there's a formula. The formula is your interest rate plus a half a point. Today, rates are in the 7s.
Yeah.
That $100,000, 12 months from now, if you didn't touch it, is $107,500. Your credit line in your bank doesn't grow.
Right.
Okay. Now, here's the other thing that's amazing about this line of credit. It's a contract with HUD. So when we're in a recession and your house value goes down, you don't get a letter again from Bank of America or Wells Fargo or Region going, when we approved your $600,000 house for a line of credit, we gave you X, but now your $600,000 house is worth $400, so we're cutting your line of credit by $50,000. Millions of people got those letters from 2008 to 2012. Right. Nothing can take away your line of credit, including, you ready for this? A hurricane that blows your house away. Do you know how many people on the East Coast, where we get more hurricanes than here, thank God, their house has been blown away? It's going to take a year to get something from your insurance company. Right. And then it's going to take a year to rebuild your house.
Correct.
And they live off their line of credit from their reverse mortgage on the house that doesn't exist.
Wow.
Because it was a contract with HUD forever. I mean, there's so many great things about this, and people don't get to hear it.
No, that makes total sense.
So what are the basic requirements? The age limit is
62, and they changed that about 10 years ago, but it used to be both borrowers had to be above the age of 62. Oh. Now only one borrower does, which is kind of great because there's a lot of couples, dad is 65, mom is 60, dad is 63, mom is 61. Dad is 84, mom is 28. That guy doesn't need a reverse mortgage.
No reverse mortgage there.
But that has been a tremendous help though to a lot of couples. And we lend based on the age of the youngest couple, of the youngest person in the couple, because we want, really and truly, even though it's not our top priority, we want the kids to have equity. But more important, as you know, men live 5 years longer than women. 5 years less than women.
I was about to say, I was like, I'll take that, but no, it's the other way around.
It used to be 7. We're catching up. It's now 5 years. And in the average,
we're all stressed now.
In the average couple, the man is usually 3 to 5 years older. So that really does mean that mom, or at that point grandma, is going to be on this planet 8 to 10 years without dad, without his Social Security, without his pension. So again, having that reverse mortgage line of credit and a house with no payment, I don't know the statistics, but I wouldn't be surprised to learn that the great majority of reverse mortgage refinances are done for widows and widowers.
Makes sense.
Who just lost so much of their income.
Mm.
So I do want to give out, you can find Michael's website. It's letsmoveforwardinreverse.com. So I'll link that to the show notes. Email is michael.banner@ccm.com.
Yes, which stands for Cross Country Mortgage, licensed in 50 states. Great mortgage.
Which is where, when you do your reverse mortgages, they're through Cross Country.
Right, yeah, I work for Cross Country Mortgage, yes.
So, we'll put all that contact information in the notes. Anything else? I mean, we could probably continue talking about this for another couple hours.
The only thing I'll mention for 10 seconds is there's now a jumbo reverse mortgage up to $4 million. And if you think people with $2 million houses aren't hurting and don't want to look and say, you know what, throw me $500,000 or $750,000 without any payment. My largest one was $6 million. $6 million house, free and clear. Lost a lot of money in a Ponzi scheme. Lost money in crypto.
Right.
saw one of
Lost money in crypto.
Yes.
Never.
Yes.
Say it ain't so.
No, it ain't so. But you know what? He called up and said, Michael, everybody keeps telling us sell the house. But my wife and I have been living here for 40 years, and we don't want to sell the house. We love this house. And my financial planner had taken, his financial planner had taken one of my classes and just said, what can you get us? I said, how old are you? They were in their upper 70s, and I lend more.
Right.
I said, we can get you about 40%. 40% of what? I said, 40% of your $6 million house. So you can give me $2.4 million. Yep. In a line of credit and a lump sum. And when do I pay it back? After you're dead.
That's amazing.
And you know what? All he took was about $800,000, enough to pay the taxes and insurance on the house to get them to their 90s, and to keep the little mini yacht filled with gas.
Wow.
They
See,
didn't
that
wanna
makes
take it
sense.
all,
That makes
but
sense.
they-
I'd love to be in a position one day where I'm
Mini
like,
yacht.
I
Only
only
want,
needed
yes.
$800,000. Only wanted $800,000.
Hey, we got weekly dreams, baby. You got to
That's
get
right.
there. You got to get.
I don't
there.
know that $192 a week gets you
All
there.
right, I might have to work a little harder, but that's okay.
Just
That's
remember, if you
squad
take a
goals.
penny a day and you double it for a month, you're a millionaire.
There you go.
Yeah.
So your 192 could turn into anything.
That's what I'm saying. Thank you.
And-
Sean is always.
And where are
being-
you getting your mortgage when you do? Because I do regular mortgages also.
Oh, well, we'll have to speak
Oh, there we
afterward.
go.
Then. That's easy peasy.
So, well, cool. Thank you. I appreciate you coming back on the show and being a guest.
Absolutely.
Absolutely. I appreciate you inviting me.
Yeah. So, again, if you want to contact Michael, you can go to his website, which is letsmoveforwardinreverse.com. You can also visit him, email him, michael.banner@ccm.com. I'll have both of those in the notes. If you have questions about a reverse mortgage, which I probably should mention in the last few seconds here, they're called HECMs, HECM, Home Equity Conversion Mortgage, right?
yeah.
See, I knew that. It's here on the screen in front of me, but I
No,
knew
you
it
knew it.
without having
I
it
can
on the
vouch he
screen
wasn't
here in
looking
front
at
of
the screen.
I knew it. So thanks again, Michael. We appreciate you being
No,
a guest
that's
on the
great.
show.
Thank you so much, both of you.
And definitely reverse mortgages will help you have more money at the end of the month rather than month at the end of the money. And we will talk to you in next week's episode of the Crushing Debt Podcast.